Did you know that you can make money by buying crypto at one place for a price and then selling it somewhere else for a higher price? This is called crypto arbitrage. The idea is simple: buy low and sell high, taking advantage of minor situational price differences across multiple platforms. If done well, you'll find yourself enjoying some pretty decent profits. In this video, you will learn all about how crypto arbitrage works, the 4 different types of crypto arbitrage trading, which are arbitrage across different exchanges, arbitrage across different trading platforms, arbitrage across different P2P ads, and arbitrage with fiat. We'll also cover some important considerations before arbitraging. Before we dive in, don't forget to like and subscribe if you enjoy our videos and want to see more such content. Now, let's get started. You must have noticed that the price of coins are not the same everywhere. Whether you compare different exchanges or different trading platforms, such as spot versus P2P on the same exchange, you'll find different prices for the same coin. This is due to reasons like supply and demand, as well as trading fees charged. Crypto arbitrage is the process of you extracting the most of these differences by buying low at one place and selling high at another. Now that you know a little about arbitrage, let's dive deeper into the different types. Arbitrage across different exchanges is the most common type of all. Users can monitor websites like CoinMarketCap to compare the prices of coins across different exchanges. For example, you could take advantage of the price difference for Bitcoin and buy it on PexPay for about $24,447 and sell it on Upbit for $24,494, leaving you with approximately $47 in profit, not accounting for trading fees. While coins like Bitcoin may not be the most feasible option given their high prices, smaller coins might serve as a more lucrative opportunity. For example, if you buy a coin for 50 cents for $1,000 on one exchange and sell it for 60 cents on another exchange, well, you could pocket a $200 profit. Do bear in mind that crypto arbitrage does require practice, and we'll touch on important considerations later on. If you don't want to keep track of multiple exchanges, you may even consider arbitrage across different platforms on the same exchange. So that means you could buy a coin on PexPay's P2P platform for 0 fees and sell it for a higher price on PexPay's spot trading platform. P2P ads provide a wide range of price differences due to many individuals setting their own preferred prices. Hence, you should be able to find many ads where the price is different from the spot platform. Another recently popular channel for arbitrage is within P2P platforms. As different ad prices are based on trading amount, popularity of payment methods offered, as well as transaction time limit, these platforms pose ample opportunities for arbitrage. If you find an ad selling USDT at 77.27 rubles and another buying USDT at 77.51 rubles, you can buy from the first ad and sell it to the second, thereby generating a profit. A key reason why this method is highly profitable is because you don't need to worry about any hidden costs like transaction fees. PexPay facilitates takers and makers to trade with 0 fees, allowing you just to focus on earning. Arbitrage with fiat is a useful opportunity for those who have bank accounts or e-wallets that support multiple currencies. This involves buying crypto with one fiat currency and selling it in another. Let's elaborate with an example. You could buy and sell Bitcoin for $18,410 and 45 cents and $18,080 respectively, or 17,150 euros and 17,300 euros respectively. In this case, buying and selling Bitcoin in the USD market would cost you around 330 USD, where buying and selling Bitcoin in the Euro market would help you profit 150 euros. However, if you look closely, the hidden opportunity lies in buying Bitcoin with Euro and selling it using USD. If you have the opportunity to trade using multiple fiat currencies, be sure to monitor the prices of coins in different fiat markets to identify any such opportunities in a timely manner. Here are some important things to note before arbitrage trading. 1. Trading fees charged by every exchange are different for buying, selling, and transferring assets. Arbitrage traders must be aware of their preferred platform's fee schedules before implementing a strategy. 2. Foreign exchange rates are also important to consider for those arbitraging with fiat. One must account for the conversion rate while calculating expected profit. 3. Time sensitivity and slippage risk is an essential consideration for arbitrage. Speed is key. If a trader isn't fast enough, there's a good chance others already benefit from the opportunity and the price gap no longer exists. This could result in slippage, which is the difference between an asset's requested and execution price. If a trader isn't quick enough, there's a real risk that the final sale price will nullify their trade setup. If you're interested in learning more, we've linked some guides in the description section below. Thank you for watching, and we'll see you again in the next video. Till then, happy earning.